What if the real value in franchising isn't in owning just one brand, but in controlling the system that multiplies dozens? And what if the difference between a $10 million outcome and a $100 million plus outcome comes down to how you structure your ownership, not what business you choose? I'm Justin Kaiser, co-founder and CEO of Empire Franchising, and I've spent the last 24 years building, scaling, and investing in businesses. And more specifically, I've taken my own franchise brand from 0 to over 100 franchise locations before it was acquired. What I'm about ready to walk you through is one of the most important and misunderstood concepts in franchising today. It's not just about building a big brand. It's about building a system that compounds value across brands. Because most people think that scale equals locations, but sophisticated investors know that scale equals structure. And structure is what determines valuation. Not effort, not revenue, not even growth alone. It's how ownership is layered across the system. So let's unpack this, because this is where most founders and even investors get it wrong. They think the goal is to build one franchise brand to 100, 200, maybe 500 franchises. And yes, that can create a meaningful outcome, but it's linear, it's slow, and it's risky, because all of your equity, all of your value, all your upside is tied to one single brand. One concept, one category, one market cycle. And if that brand fails, everything else fails. But the real game, the one that institutional capital understands, is building a platform that owns equity across multiple brands. And this is where things start to compound. Because instead of one revenue stream, you now have multiple. Instead of one growth curve, you now have a portfolio of growth curves. And instead of one exit, you now have multiple paths to liquidity. And here's the key. You don't need to own 100% of anything. You just need to own the right percentage of enough things that scale. Because equity aggregation is where exponential value is created, not operational ownership alone. And this is exactly how private equity thinks. They don't go all in on one deal. They build portfolios. They control structure, they layer ownership, and they optimize for exit multiples, not just cash flow. And franchising, when structured correctly, is one of the most efficient vehicles in the world to execute this strategy. Because franchise systems are designed to scale. They're designed to duplicate. They're designed to generate recurring revenue. But here's where it gets interesting, because most people in franchising still operate like small business owners, not platform builders. They're focused on selling franchise units, managing franchisees, growing locations. But they're not thinking about how the ownership of that system is structured. And that's the gap, because when you shift from operator mindset to platform mindset, everything changes. You're not just building a business, you're building an asset, and not just any asset. You're building a portfolio asset that can be valued based on future cash flows across multiple brands. And when you do that, valuation isn't based on what you've done, it's based on what the system can produce. And that's a completely different conversation, because now you're talking about scalability, predictability, and repeatability. And those are the three things that buyers pay premiums for. So let me give you a real framework to think about, because this is where it becomes actionable. Step one, you identify strong operators, real businesses, not ideas, not concepts, but businesses that already work, businesses with demand, with unit economics that make sense, with something that can be duplicated. Step two, you structure that business into a franchise model, not just legally, but operationally, meaning systems, processes, marketing, sales, and support, everything that allows that business to be replicated across markets. Step three, you install a growth engine. And this is where most fail, because growth is not random, it's engineered. It's funnels, it's lead generation, it's nurturing, it's conversion systems, it's infrastructure that turns interest into signed franchise agreements. Step four, you scale that brand to validation. We're talking about 3 to 5 units to prove the model, because once you have this validation, the value of that brand increases exponentially. Here's the shift. Instead of holding on to it forever, you now have options. You can continue to scale, or you can exit, or you can recapitalize. And now imagine doing that with not just one brand, but with 5, 10, 15, 20, 50 brands, all different stages. Some early, some scaling, some exiting. Now your platform is generating revenue, equity growth, and liquidity events all at the same time. And this is where the real leverage comes in, because your time isn't tied to one business anymore. Your infrastructure supports multiple businesses. Your marketing feeds multiple brands. Your systems are reused across the platform, so your marginal cost of growth decreases while your upside increases. And that's how you create asymmetric returns, by working smarter, not working harder. And here's where most people miss it. Buyers, especially institutional buyers, don't just look at what you've built. They look at what you can continue to build. They look at your platform, your systems, your ability to replicate success across brands. That's where premiums are paid for platforms, because now investors are not just buying a business, they're buying a machine. They're buying a machine that can produce more businesses, more revenue, more exits. And that's a completely different valuation multiple. So when people ask me what creates massive outcomes in franchising, it's not just growth. It's not just scale. It's not even just brand strength. It's ownership structure. It's equity positioning. It's platform leverage. Because at the end of the day, the market doesn't reward effort. It rewards structure. If you understand how to structure ownership across multiple scalable assets like we do here at Empire Franchising, you can create outcomes that most people never even see possible. Now, if you're an investor and you're looking at investing in franchising, stop thinking about one brand. Start thinking about systems. Start thinking about portfolios. Start thinking about how you can own a piece of multiple scalable businesses, because that's where the real wealth is created. Now, if you want to understand how we build and structure franchise platforms the right way, the scalable way, the platform way, then check out empirefranchising.com. We break this down in detail in our videos. And if you're serious about investing something that can actually scale, something that can compound, then subscribe to the channel, because this is the game that most people are not even aware is being played. And once you see it, you can't unsee it.